Altcoin charts, man. Altcoin charts, not even altcoins. Actually, the weird thing that's happening that I want to talk about in this video has a lot to do with altcoins and Bitcoin. This is Bitcoin dominance on the weekly chart. It's just weird falling into this environment that we're falling into right now on these charts. And Bitcoin dominance is falling right now. So I want to talk about a lot of different things in this video. So please hit the subscribe and like on the way in if you're not a subscriber. And if you're not in our intelligence system, get back there. We have the free trial still going on right now. We've got a ton of different risk metrics, insane for me as I do this video. We are currently approaching, I should say, end-to-end accumulation areas. Many of you, along with myself, 95% of the industry thought right now we'd be in take profit areas in terms of risk. We are on the exact other side of it, everybody. So I hope you're doing well out there. Hang in there. I can't tell you how many times I've come on to a live stream in these environments and I do something like this, full screen, and I say, it's gonna be okay. And actually, I want to start the video by explaining something to you. It's important just because it's my macro view. I posted this the other day on X. Many won't agree, but this is how it is. Altcoin market cap is back at its over level for the 5th time in 3 years. And by the way, everybody, please smash that like on the way in, because I know we're going to have a tough time with the haters today. Except this time, 3 years of quantitative tightening ends in 2 weeks. So everything we're about to discuss in this video, please just know this is my approach to the market. And you all know that. Even when we're in uptrends and I'm sitting here maybe saying something like, it could all go to zero. I don't know. Right now, especially right now, I'd rather fail as an investor and it goes to zero than sell right before expansion. That's just me. And I've been doing a lot of different videos in like the last 1 to 2 weeks from a macroeconomic data point perspective. They've taken me a very long time to do these videos, but they're very data driven. And it has a lot to do with, you know, something like this. This is the TGA. This is the Fed balance sheet, quantitative tightening, quantitative easing, the liquidity factor that is going on, the business cycle. Here's the PMI charts, everything, everybody. For me, I would just rather go to zero and I'm holding than miss out on what I think is about to happen, though it's been an extended cycle. So let's talk about this. And a lot of this is what you see on the screen. It's over. That is the sentiment. And I actually was editing a video that I recorded and I was going to release later today about short-term holders, what they're doing. The sentiment is absolutely terrible right now, but I wanted to do a live stream instead because crypto is looking rough. So let's go through some posts and then I want to look at the charts. This is just a note because I think some of what we see happening right now, we're going to see it on the VIX in just a moment, has something to do with this. Morgan Stanley no longer expects Fed rate cut in December. This kind of started yesterday and it's going into today. But I saw this comment. It was just really good because this really, for me, puts it into perspective of how I'm thinking. This might be a stupid question, but if the market is now pricing in no December rate cuts, but the market is forward looking, at what point does it start pricing in the inevitable rate cuts once Trump is able to stack the Fed how he wants in a few months? And I think Trump is going to be announcing his pick by the end of this year. I think this is like news that's just coming out. We're very zoomed into the charts. They look absolutely horrendous. Let's go back to the altcoin market cap chart. I've been doing these videos since all the way back here. Only a few times has it felt like it feels now. And we're going to look at that in terms of fear. But you can go back here. This was like June 2022, bear market low, especially this one. Here's FTX, everybody. The FTX, we're going to talk about that. The FTX fear, everything was happening there. And then, of course, right here, this was the bottom of 2018 bear market. And then I think lastly, I guess, COVID. This is it. We're in terms of sentiment and fear and the vibe, this is where we are right now in this chart. Now, there's a lot to talk about in terms of from a macroeconomic perspective where we are, and we're going to talk about that. So let us continue through some of these posts. This is something I was recording the video on today. I will probably release it tomorrow, but short-term holders underwater. 2020 COVID crash, 92% in a loss. This was at $3,800, around $3,800. 2022 FTX collapse. We just looked at that on the charts. 94% were in a loss at a $16,000 Bitcoin. Please think about this, because now we're getting into the data, everybody. All I want this to be is data driven, okay? I'm a macro bull. I'd rather hold a zero than not hold, but just look at this data. Hopefully you can be unemotional in these moments, because that's where the money is made. It's in these moments, I'm telling you. Today, 99% in a loss at $89,000. This is the highest short-term holder capitulation ever recorded. That's crazy. And it's $89,000. That's some valuable data. And I did a video on holder data, because there's a lot to be said in terms of what is happening from a holder perspective right now. And there's a lot of clues. I saw Plan C. We're seeing pretty significant levels of capitulation and might see a $10,000 swing to the downside within 24 hours. This is not my view. And what he's saying, though, I will say is possible. Price on the short term, at the end of the day, I think in his opinion, and this is what I want to exemplify, is just that. It's short term. No one knows for sure, but 70 to 75,000 Bitcoin is starting to look increasingly probable to him. This is starting to remind me of the fast, short-lived, full-on capitulation similar to 2020. Potentially, there's a global black swan event brewing, and Bitcoin is the early signal. I really hope there's not. But again, if it is, right, it really is starting to look like back here in terms of sentiment, in terms of the chart, in terms of falling. This is the altcoin market cap chart, or actually this is total crypto market cap chart. I'm sorry, Bitcoin's included, but it's starting to look like back here. And what is so interesting to me is how the Fed ended quantitative tightening right here as well. So this whole area back here, all I want to say is it wasn't the exact immediate bottom, whether you're looking at when QT ended or you're looking at the COVID Black Swan event. It wasn't the immediate bottom, but that range was the end of the bottom, towards the end of the range of the bottom. And so right now, this is why I think the data is suggesting, even with this uptrend of higher highs and higher lows in the market, I don't think we're entering this very long bear market like we've seen. I don't think that's what's happening right now. We're consolidating for sure, but in the macro scheme of things, all data is pointing to we are preparing for, after this consolidation and redistribution and whatever capitulation needs to happen, we are preparing for the next phase of the macro cycle. And I really mean the macro cycle. I'm talking about the business cycle, everybody. It has been years of liquidity being drained from this system. And this PMI chart is a very good example of, after this is coming to an end, QT, and I've been talking about this, if this thing starts expanding, this is what has led to previous bull markets. So that's why I'm saying I'm focused on the macroeconomic perspective. And now that we're falling into high fear events or environments, it's so time to pay attention. Everybody, we got thousands of people in this video. If you're getting any value from this content, please smash that like button right now. We got 146 likes. So your support means a ton to me. I'm shilling the likes, everybody. Somebody says bear market. It's fine. It's fine. The opinions, I like them. Bear market, bull market, whatever you think. I think what the data is suggesting, if you look at a PMI chart, if you look at the business cycles and liquidity, we've been in a bear market this entire time. And we've actually not exited the bear market since the last bull market highs. But let's continue this story. So fear levels are basically a FTX collapse and COVID crash, both of which were the bottom, not the start of a downtrend. And I want to add to this further with this post on top of fear, and then we're going to dive into the charts. The fear and greed index falls to 8, now at its lowest level since the April 2025 bottom. So for context, we've already been talking about, COVID, 2018 bear market bottom, FTX collapse right here, the last bear market bottoming out area back here. Okay, so now we're within that range in terms of fear right at this moment. And again, this is a total crypto market cap chart sitting just under $3 trillion. We are back to extreme fear with the S&P 500 just 5% away from a record high. It's so weird because the S&P 500 is just 5% away from record high, and the fear is this high. And the crypto charts are very similar, right? In terms of especially Bitcoin. The last time this happened, the S&P 500 rallied 200 or plus 200 points in 48 hours. So again, I know many people want to sit here and they want to look at a simple moving average breaking on the zoomed out charts and say, this is it, it's game over. We're falling into a very long, brutal bear market, like beginning of 2018 or the beginning of 2021. But I just want to say, everybody, all this data that I'm presenting to you, and this is barely the surface of it. This is suggestive that we're not entering a full-scale bear market, but something very big for a potential bull move is in the works. Every time we get into bottom bear market areas, and this is really the point, this is what this looks like. Somebody said, I think, how low can we go? And it's true. It's the question everybody has. I recorded a video earlier today. I need to edit it, but that was kind of it. Everybody wants to know, is it over? How low are we going to go? Is the bottom in? And it is, man. If you remember, I don't know if you were here or not, but like if you just go look at the crypto market cap chart, like anytime we're falling back here in COVID, back here at the bottom of 2018, it's just like, it's the feeling, right? When is this going to end? So lastly, as we pivot into charts, I do want to just make a note. If you've not seen any of my recent videos, they're less technical analysis and they're way more macro minded. But Ray Dalio also did this post stimulating into a bubble a couple of weeks ago. Did you see the Fed's announcement that it will stop QT and begin QE? While it's described as a technical maneuver, any way you cut it, it's an easing move. This isn't opinion, everybody. What the Fed is doing, this is not opinion. What is getting ready to happen to the Fed balance sheet here and the end of years of quantitative tightening? It's not an opinion. It's going to happen. This is only the second time this has ever happened. And when this happens, historically, as it relates to crypto, and as the business cycle starts expanding and we get liquidity, not even just flowing into the system, but just that drainage that's been happening for years. When we have that stop, this is what leads to bull runs and bull markets. So there is if you're a macro-minded investor, there's no better thing to be happening right now that we are like, 11 days or so, 12 days away from the end of QT. There's nothing better. If you're like, all right, this is a bummer, because I am, but I'm here, I'm here for it. There's nothing better than record-breaking fear as we enter this macro environment. It just is what it is. Dan, I'm having trouble reading this where I have this. When will we see early signs of liquidity enter into the market? When do you determine we are definitely into a bear market? What signs will make you challenge your thesis on a business cycle? So, and I kind of been mentioning this in recent videos, right? So a lot of people look at rate cuts, what the Fed is doing, rate cuts, right? But there's two dynamics to this. The fact that rate cuts, and we just looked at this at the beginning of the video, Morgan Stanley no longer expects Fed rate cut in December. This does not change the macro thesis at all. If it does anything, it slows it down, right? It slows it down. But this happening, Fed cutting rates, is like only one small mechanism to the liquidity machine, right? And so that's why in recent videos, what I've been trying to do is really start tracking things like this. And this is the Treasury General account. This is basically like the Fed's checking account. And this is probably, zoom in on this, you can actually see it just tick down, right? And this is something that I want to start monitoring because of the Fed shutdown and everything that did. It locked up a lot of liquidity. And so this can be a kind of delayed effect in terms of when we start seeing that enter the system. But what we want to see is the Fed balance sheet start kind of contracting back down after being locked up here, right? So that money in the short term could actually cause us to balance out of these levels. But that's something in the short term. Other than that, I think as we go into the rest of this year and 2026, it's going to be all about monitoring the PMI. It's going to be all about monitoring the lagging effect of basically what happens here. QT, no matter how you spin it, is ending. And this is the big macro powerhouse thing that if you're a macro-minded investor, it's really what matters. So I think the answer to answer your question, it's kind of like if the Fed just, here's what would need to happen for me to change my thesis here is like if Jerome Powell and the Fed comes out and says something that is so contradictory to what is about to happen, and they've waited so long. They delayed this for like so much longer than, most analysts, economists would have thought or wanted. So people are irritated with that, right? But finally it's coming to an end. But if all of a sudden Jerome Powell's like, they're going to they're going to even flip it up again and change their monetary policy again in terms of tightening and stuff, then I think I will have some concern. I want to make a note because people get irritated that I'm still bullish even in this mindset or even in this like environment. Like I'm bullish, and there really will be, if this plays out, even if it's slower or faster, and we get gains and we get an uptick in PMI, right? I will start monitoring closely and I will start creating videos. I've been very much enjoying these videos I've been doing, a brand new style where it takes me hours to research the data and really trying to present it clearly. I will be doing those videos in discussing selling, being ready, because I genuinely think I'm not a permabull, everybody, but I just think the bull market that everybody's been waiting for hasn't happened yet, and I'm still waiting. And so when it's time to flip from being bullish and start taking profits, I will be doing videos on it. I'm not going to be a permabull just through a bull market and then back into the next bear market. It's not going to happen. That's not my intention here at all. I just want to say that because I think people see me. I'm very optimistic. I'm still bullish as we're falling. But this is just because I have a ton of data that I think for me and my risk appetite is just suggesting, you know what? Stay in the game. The move hasn't happened yet. And people are capitulating right now. These numbers are insane. Extreme fear is insane. So let's look at the charts. I start like rambling so much. I wanted to bring up the VIX. It was referenced in this post, I think. Maybe not, but either way, here it is. Fear and greed index, basically, S&P 500. Just look at where we are right now. Fear is increasing around a 27. If you go back, and I noticed there's higher fear areas, right? Back here, if you remember, this is April, right? But still, so interesting to me is the amount of people that are capitulating right now is record breaking. 99% in a loss. 99% of short-term holders are at a loss. This was at $89,000, by the way. This was earlier. But with that being said, that means if we go back to the VIX, more holders are at a loss than what was going on back here. And this got high, if you remember, but it came down fast and the bounce was fast. But what I think is really helpful is we're basically approaching areas in terms of fear like we saw at the bottom of the 2018 bear market in December. That's the level that we're approaching. Obviously, COVID was all the way up here. You remember it just, the rocket ship into fear was crazy, and this is a weekly chart. It happened very quick and it came all the way back down quick. but we're very much in a very similar fear environment as a 2018 bottom. And I think that's pretty notable and probably, I would say helpful data to pay attention to. So let's continue. I want to look at Cardano, as well as Solana. I have Dogecoin, because these are data points that have a, just good risk data points, I guess you could say. And I just want to read this to you. I'm not going to get into our risk models too much, but this is our Cardano risk model. Historically, at this risk level 20, the price was higher 72% of the time after 3 months, 95% of the time after 1 year. We're at a 20, everybody. We are making our way towards bear market lows. This is precisely the reason why I've put together this team to build this company and obviously we all thought we'd be taking profits and planning our exits based off of high risks sooner or first. But we're literally approaching accumulation levels first. That's just the extended cycle. It's nobody's fault. It just is what it is. But we're at a 20. If you go look at Solana, a 23. At this score, the price was higher 62% of the time after 3 months and 100% of the time after 1 year. The thing that I focus on especially is that 1 year, because just think about that. That's a non-emotional, just strictly data-driven insight. It's just what it is. It's data. But it's so interesting to me because I really think when we start thinking about QT coming to an end after years, the liquidity drain stopping, what do you think is the most important time frame for a macro investor right now as fear is all-time high? It's like, I would say the next year is important. So when you start, we have our risk scores that are saying one thing, and it's based on our algorithms, emerging asset theory, game theory, price volatility, volume. But when you start putting into play now what the Fed is doing, that QT ends in like a couple of weeks, not even, and you look at the macro picture, risk is low. And this is precisely why I did the video in May. Altcoins officially less risky than Bitcoin. Bitcoin dominance is down since I've done that video. And I'm not saying certain altcoin prices versus Bitcoin price, like all of them are going to be up versus Bitcoin. That's not the purpose of that video. Altcoins officially less risky. Risk is not price. I can't highlight that enough. Risk is not price. But from a cycle perspective, and now we can look at the Bitcoin dominance chart, everybody, there's so many reasons why I did this video. Some of it having to do with our risk models and our intelligence system and what it's saying in terms of altcoin risk and Bitcoin risk, altcoin risk lower. But look at this right now. QT is about to come to an end, and here's where Bitcoin dominance is. QT came to an end last cycle right here. This was September 2019. This was the first time ever QT came to an end. On the macro and the bigger picture, and there was a lot of events that went on here. Think of COVID, all that. But in the bigger picture, altcoins, when the liquidity situation gets better in general for risk on assets, altcoins do better, right? So maybe it'll be wrong. Like maybe I'm wrong and altcoins aren't less risky, right? As we step into QT ending. But I'm just saying the data suggests that if risk on does well because liquidity stops being drained, then the data suggests that altcoins will outperform Bitcoin and they will do pretty well. And so I just wanted to make a note of that on the Bitcoin charts or Bitcoin dominance charts. Got a lot of comments coming in. I hope you guys are doing all right. I really do. Cause I sit here, I just present data. I'm bullish, but you have to realize I'm feeling it. Like I'm with you guys. I don't enjoy it. But this is exactly why I sit here, especially lately doing these new style videos. I sit here for hours studying the data, trying to understand better and better the macroeconomic picture. And I do it because emotion is zero help. It's of zero help, everybody. It just is. It doesn't help at all. It makes no sense. Dan, just relax and wait for a rally. It will come one day. Nobody knows when, but it will. I like that comment. And I agree. But I think like a lot of you out there, I just, I do. I mean, I'm running different businesses and trying to do stuff, but I do just constantly glance at the price. I can't help but track it. I'm just reading some comments, see how you guys are doing out there. This is like a good question. How long does the bear market last? This is what I've been trying to do in my videos, like in the last week, which is not really trying to explain exactly how long this environment will last, but trying to explain why we've had such a tough extended cycle. And it's been based on quantitative tightening. It truly has been. I still can't get over. I hope this works, but yeah, there you go. If you look at, this is the Fed balance sheet in green. There's the tightening happening. And there's another Russell 2000 actually. I know blockchain backer, BC backer. He talks a lot about the Russell 2000. But if you put the if you put this over, and I'm sorry, I don't know if I said the Fed balance sheet, but the PMI. If you look at that chart over Cardano, just look at that, everybody. Just look at that. That green is the PMI. So going back to the PMI, this is the PMI. It has been record-breaking contraction. Let me zoom out for you actually to see this. This is the data that matters to me. This isn't like one moving average on a Bitcoin chart. This is the data that matters to me. Look at the PMI being contracted for years. And I'm talking about, we're going back here, like we're going back, look at this, to like the 40s. Record-breaking contraction, everybody. Very, very tough. If you go look again at this chart, the PMI, the business cycle, money flowing through the economy, right? If you look at that green line on Cardano, look at how in sync altcoins basically are with that. So if this goes into expansion after record-breaking contraction, record-breaking, we just looked at that, zoomed out since the 40s. The question is, what happens with these risk-on assets like Cardano and crypto as Clarity Act passes, as altcoin ETFs get approved? What happens? Again, there's absolutely no guarantee. Maybe the answer to that question is it all goes to zero, right? We have to manage our risk in that regard. But I'm positioning for if we get expansion in the PMI, which is very, 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 very possible with QT ending, amongst other policy things that are going on, altcoins are just getting so oversold. And guess what? So low in risk. So now really would be not only the time to, we have an exit planner back here to start planning exits, whether it's for Bitcoin or any of the other assets back here. But you plan your exits based on price speculation. If you're accumulating in low levels, you're like, man, I'm accumulating ADA here and I'm going to sell it at 70 cents now, take some profit. Go do it. Set it up here. But activate risk mode, and then you're setting alerts for true risk areas. If you want to sell when it's at 50 risk, or if you want to sell Solana when it's getting up here in the crazy kind of overbought 70s, 80s, 90s, that's the purpose of this system. So it's accumulation and it's risk, but it's all data driven. If I go to Ethereum, I wanted to bring this up. I'm so bummed about it, to be very clear. I'm so bummed. I really am. If you've watched my content, then you'll know why I'm bummed. This is Ethereum. Let me just make a note. FTX, there it is on the Ethereum chart. This is how it feels right now, right? One more note, and then I'll get into the technicals. But QT ends right here, literally. We're like a week away almost. QT ended here. Notice how Ethereum kept falling, right? Even the 20-week fell below the 50, the green below the blue. Look, there's a green. Dude, we could just keep falling. This could get bad in the weeks ahead. Please be prepared. We could bounce, but I'm just saying it's very interesting. This same exact almost move was happening through quantitative tightening ending last cycle. But this was a phase of going from liquidity contraction to expansion. This is where I think we are right now, going from liquidity contraction to expansion. So I'm here for it. I don't know what it's going to look like. I do know we're at record-breaking fear. Now to what makes me bummed about this chart. And I guess there's still a chance I'll talk about, but I've been tracking, as you know, this multi-year triangle. It's been so fun. I remember, if you remember, falling below it, breakout. At that time, many people were incredibly bearish going into the April tariff fear. And I just said, this is not a bear market. I don't think we're entering a bear market. And I'm saying the same thing now. I don't think we're entering a bear market. And I was saying, I don't think we're going to hit like this massive pattern target. And I think this will be a busted pattern where we break back up and break to the upside. And we did. And then we tracked the throwback, which is also a very nice technical move. But I just stand here and I hate seeing that the apex is broken. It is broken support. And it is what it is. Not every pattern plays out. Tracking this, it almost was too good to be true. A fake breakout, a busted pattern, a perfect throwback, and then continue into the bull. It's like too easy. One thing in crypto is it's never so easy, but one thing this cycle, it's especially not easy, and it's incredibly difficult. But the reason why it's a bummer is because I have enjoyed so much in anticipating the price action of Ethereum. And if we get, especially a close below the 200 week at around 2450, it's completely invalidated. But more so it's more of what needs to happen for me to be like, dude, this is still in play. I'll go to the monthly and say Ethereum needs to close the monthly. Okay. This is what needs to happen. This will be fun to track in the next 11 days or so. Ethereum needs to close above the, it needs to close a monthly candle above that lower trend line in the apex. So 3,200, which, that's actually not that far away from where Ethereum is right now. It could happen. I don't know. But that's what I'm watching. And notice how the 20-month moving average in green is right there as well. That would be an incredible area of support. Really on the macro, if Ethereum can find support between the 20 and 50, that's good. But if it shows support and closes the monthly candle above the 20-month and that lower trend line, this triangle and the pattern that I've been tracking is still in play for me. But you can see how volatile and up in the air that is right now, because we just don't know what the price action is going to do in the next 11 days or so. Bear market loading. Thank you for your participation. See you in 2029. I appreciate the comment. I appreciate the emojis and the laughs, because, I'll walk out of my office. I'll say stuff like that to my wife. I'll just be like, man, we're going to zero. So I make pessimistic jokes like that too. But I do want to speak to that comment because I see them a lot and I'm always like, oh, I want to say something to it. I want to do a video on it. I am so not in that camp of being like, well, cycle's over, 4-year cycle's over. Go watch my video the other day. I did 4-year cycle. I forget what the title was, but there never was a 4-year cycle, something like that. I'm not in that camp of being like 4-year cycle's over. See ya in 2029. I'm not in that camp. And I'm telling you, everybody, it's so worth studying macroeconomic data. And it's not something, I'm not saying I sat here on this YouTube channel for 8 years doing this. This is very recent for me. But when I started really dissecting what is going on, insane. So be very careful with being like, at this moment of this business cycle, as we go into the end of QT, be very, very careful just being like, I'll see you in 4 years. It's over. Pack it up. If you want to, that's fine. Do it. If you want to sell, do it. All right, at least we got one person out here. I'm not in that camp. Dude, we got almost 10,000 people. People are locked in, man. I just know it. And I know most of you are just silent, macro-minded investors just tracking these markets just like me. I do know it. If you are one of those, hit that like. If you're with me. I like this one because, and I mentioned this, I think in yesterday's video. Please look at the last time we closed below the 50-week. This isn't likely a bull market anymore. I know there's a lot of people that have been watching my videos. I don't like continually repeating myself, but my videos have been talking about, and I think it was yesterday's video, I said, you can't just look at one weekly moving average and call bull market, bear market. You just can't do that. So many times we can see, here's the total crypto market cap chart, for instance. You can see this chart falling below different areas. It doesn't always mean the same thing. And so, point being, would you rather, and this is a question for everybody, and this is something I've asked myself, would you rather use solely big indicators like this, like, hey, we're breaking below the 50-week moving average, that's it, pack it up? Or would you rather try and understand really the engine that has moved crypto? And it's not an opinion that this is the case. This is the case. Liquidity has been the driver. Would you like to understand what liquidity is doing right now? Would you like to understand what liquidity is getting ready to do? I know it's a lot, right? Even my videos lately, it's a lot of data. It's a lot of like trying to understand new concepts, new terms, understanding quantitative tightening. What does that even mean? What is the Fed sucking liquidity out of the system look like? What is the PMI? What's the business cycle? What does this chart mean? This is like the general treasury or general account balance of the Fed. This is like the checking account. What does this mean? Why do we want it to fall? Right? Those things are so worth paying attention to. And I am so dedicated right now in this season to continue creating content in trying to understand them better, but also present them to you better, because for far too long, the crypto analysts, including myself, we focused on really just simple, conceptual, technical analysis points like this. We're falling below the 50-week. That means something, you know? And this is so important. Don't get me wrong. It's very important, but it's not the only thing. And so there's a confluence of a lot of different data going on right now. But long story short, I do not think this means we're entering some long-term, year-long bear market like previously. And I should also note this, like, I think the big indicator that actually hasn't even happened yet is this 20-week falling below the 50. That's not happened. We fell below the 50-week back here in March and April. We fell below the 50-week back here in September, right? And we closed the candles below the 50-week. That wasn't the beginning of a bear market. So that's invalidated. Don't worry, Dan, they don't understand. You'll just frustrate yourself trying to explain liquidity cycles. Yeah, but the thing is, like, I think there is value to continue repeating it. I do want people to understand. And not understand from this point of like, dude, you need to be bullish. Look at what the data is saying. Look at the business cycle. Look at liquidity. Like, obviously that's my thesis, but I'm not trying to convince anybody. I'm literally I'm tracking this completely publicly. And that's why I did the video like a week or two ago. Like, if I'm wrong in front of everyone. It is what it is. But I'm tracking this publicly because it means a lot. It really does. So yeah, back to my point. Then inevitably QE will come. So this is partly Ray Dalio's point, that the end of quantitative tightening is described as a technical maneuver. Any way you cut it, it's an easing move. So that's that
mechanism that I really want to track now. And it's not something that we can just open one chart one day and be like, okay, what happened with this? What now? You know, it's not like December 2nd. If we go back to the Fed balance sheet, it's not like December 2nd, we can open this chart and be like, all right, what's it doing? What's going on? Like, this is going to be a very long-term process. And especially because this is only the second time in history, everybody, that we've gotten this quantitative tightening and all this pressure on the system. Only the second time it's ever ended. This whole concept of QE, QT, this started because of the crash that happened in 2008. This is not like this long-term thing that has been going on for like 100 years or something. So this is a very new concept. And so just continuing to track these things are very important. But yeah, let's look at some altcoins. You know, if you have an altcoin you want to check out, hit it in the comments and let me know. I'm going to just go through some. Here's Cardano. Crazy. I mean, I won't say, and there's that PMI. Look at that business cycle chart over Cardano. Again, we get this expansion. If you're new to the stream, we get expansion in this chart. Just be prepared for it. So point being though, what's crazy is the way that Cardano is falling. It's just not fun, right? For Cardano holders, but it's just such a similar vibe as when QT was ending last cycle. And I'm not going to sit here and say, hey, I was a big ADA holder back here. I don't think I was. I think it was more over here in this area where I started. But this exemplifies crypto, right? Look at this. Falling into QT ending. And then QT ends in mid-September and it continues falling, right? I think it was mid-September, continues falling. And then we're about to bounce. COVID hits. But ultimately, business cycle expansion, QT ended. And we're in a similar environment right now. And what's crazy to me, if you look at September 2019, when all that was happening, just think about this, please. ADA was 4 cents. And I know all of you want ADA, if you're an ADA holder, to be 40 or, $4 right now. And there, a year ago, it looked like it was potentially heading into that direction. Extended cycle ruined that for sure. But you want it $4. It's at 40 cents, right? 43 cents. At this moment, QT ending, it was at 4 cents last cycle. It's a very nice example of, I think, why being a macro-minded investor is a good approach. This is why I'm a macro-minded investor. For Bitcoin holders, a lot of that is the same. It's the same type of thesis. It's the same type of approach. It's playing the long game. And I think the crypto space as a whole is insanely undervalued and new. And there is so much valuation and capital that is going to just, I think, what are we, like $1 trillion market cap right now, like just for altcoins, basically. There's so much capital that's going to come in, I think, as QT ends, pro-crypto legislation continues, institutions are on board. They're accumulating right now, everybody. Why are they doing that? I think because they're macro-minded value investors, meaning when value investor buys the fear, value investors buy when things are undervalued. It's not a typical retail person being like, dude, crypto's looking great. Let's buy the top of a bull market. No, they're buying when things are undervalued. And so point being, crazy, similar environment from a business cycle perspective, that is QT ending, but we're at 43 cents. We're not at 40 cents. And actually, if you go to a risk model, I'm curious, if we go to Cardano at 20 and we look at the risk model in September 2000, look at this. Crazy. September 2019. You want to get a sense of how these risk models work. And we have a free trial going on right now if you want access. We have a ton of assets back there. Here's Cardano, September 9th, 2019. QT about to end for the first time in history. Right now, it's about to end for the second time in history. Cardano 19, right around a 20. And I want to make a note. It fell to 11, it looks like. Let's see. 9. It fell to 9. This is why it's crazy. Like, we're that close to, and we're already really in accumulation phase, but we're that close to like bottoming out accumulation phases in our risk models. And right now, I thought we'd be covering exit areas. And when we get to exit areas, and even maybe soon accumulation areas. I probably won't be showing these charts as much. This is for our members to get in here and manage their alerts and set everything. But that's crazy insight. Here's Dogecoin. I wanted to look at Dogecoin. This exemplifies very nicely, even from just an illustration of our risk model and the heat map and what Doge is doing. We've not entered a bull market. The bull market hasn't happened yet. This has been mostly bear market, even up until this moment. And it's, again, it all stems back to years of QT. So that's Cardano. That's Dogecoin. We did Ethereum. What else are you all watching? Let me go see if you... Dude, I'm scrolling fast and I feel like I just saw a ton of XRP. I don't know if somebody's spamming, but let's look at... Do I have an XRP? I have an XRP somewhere. Let's see. $1.99. XRP falling below 2. Crazy. I think the most crazy part about it is like, and probably most mental part, and this is where I have not trouble, but it does become interesting to me, is like, look at May 2018, right? Very bad time. We were about to fall into, and this is where the mental part comes in and where I try to separate mental, emotional, and data. So XRP, right? We fall below that 50-week moving average in blue. The 20-week is still above, but look at this, 651 days. 651 days, everybody, till the bear market low was in. Maybe even a little bit more. Yeah, 658. Okay, that's one. Number two on XRP, and this really applies to a lot of the charts right now. Let's go to last cycle now. There it is again, this move. November 2021. XRP falling below the 50-week moving average. The 20-week, not yet, falling below the 50. We haven't even had that move yet. But let's look at the time frame. Let's see. I mean, we should probably get it where it's fallen below both moving averages. So like probably like right here even. To the bottom, it was, there we go, 196 days. So, and let me see this one. Yeah, this one's good. And then, so that's why this, right now, we have the 50, we have XRP falling below the 50-week moving average. And we absolutely have that nostalgia, right? Like, dude, this is it. This is the beginning of a bear market. That's why you see a lot of posts right now talking about 50-week moving average or 20 below the 50, whatever. Because just look at that. This is really a key indicator that has marked, man, we're going into a really tough time. But let me explain something to you again, or even just show you. Look at that. Look at this. This is the thing that's causing me to, I'm not like, guys, we're blasting off tomorrow, but this business cycle chart, because of what it was doing going into that move. Look at that. That's the PMI chart. Falling, crypto falls with it. Expansion, crypto expands with it. Look at this, even last bear market, falling. And we've had assets like XRP, even Cardano. XRP outperformed Cardano, but we've had Bitcoin. We've had higher highs and higher lows in the bull market, or in the, I'm not calling it a bull market, in this record-breaking contraction. This is exactly why I'm having trouble sitting here. Just, I'm not going to sit here day after day and be like, dude, we fell below the 50-week bear market. Because right now, this PMI chart is not right here, about to fall, right? In the green. It's not right here, about to fall. I don't want to say like with absolute certainty that it's going to expand, but I'm just saying in terms of general direction, right? Because of quantitative tightening coming to an end, it's more likely to start going up. Okay. So that is the thing that is so much more important to me than a moving average. Moving averages are broken all the time. Look, we broke the 200 moving average back here and it was close to the bottom. It is what it is. We have to look for support and we can find support. Even on price action, we have support between $150 and $2 for XRP. We can start looking for more structure. We can start looking for these things. But I won't sit here and start doing bear market videos because we fell below 50 while you overlay a business cycle chart that you see in green, and it's very clear that crypto is following that chart. And now we're in high fear, almost record-breaking fear right now, as the PMI chart is about to go into expansion potentially. I'm sorry, but I won't be calling the bear market right now. And I don't care. Like, if I'm wrong in front of everybody. But I'm not going to be sitting here doing that. I only have the option to hold at this point. I'd lose hundreds if I close now. A lot of people feel that way. Like, I get it. I really do get it. I think, if you can manage to zoom out and pay attention to this data, and if you have or if you could increase your stamina as an investor, I think it's very helpful. Dan, this is a good chart. Never noticed this. Thanks, man. I'm having trouble with it because it really is a good chart, but I don't want to get to this point as a content creator where I'm just like, everybody, it's all about the PMI. It only matters what the PMI does, because there are so many moving parts, but it just makes so much sense. It's absolutely insane. And I've been meaning to do a video on this, but like even the short term, like if you really zoom in on this PMI chart, for instance, like look what just a little bit of an uptick in the PMI, a little bit of an uptick. Look what it did for XRP. You see that? There's the uptick. There's XRP. Are you kidding me? This was during quantitative tightening, by the way, everybody. By the way, if you're not a subscriber, smash it right now, everybody. 500% gains because we had a little bit of an uptick on PMI. That was during QT. And I think what we need to remember right now as we study and look at all these altcoin charts is, and when we think about the broader picture of the cycle in general, is like when quantitative tightening stops, right? Because it is in like 11 days. So real quick, there it is, years of QT. It's going to at the very least level off. Very least. Let's just go to the altcoin market cap chart or the total crypto market chart. When liquidity or when the QT stops, it's not like liquidity is going to just flood in and we're going to pump October or December 2nd. And I say that a lot. But it stops the draining. And then that's what has kind of a cascading effect. And there's no certain timeline to it. It just stops the draining, and we slowly begin to see the business cycle start loosening up, I guess you could say. And again, let me put the business cycle on this chart. There it is. So what I take away from this, if we look at the business cycle overlaid on top of altcoins, look at that. Look at this. Let me zoom. It's crazy. I'm back here in 2014. I keep saying altcoins. This is the total crypto market cap chart. So boom, look at the flow with the cycles. So what is crazy to me, and I think I've mentioned this, is the very fact that crypto has done this during this is impressive. It could have been way worse. It really could have been way worse. Caspa. I'm going to go in our intelligence system because I know we just added Caspa risk model. It's at a 15. So emerging asset theory is helpful on charts like this. It's basically statistical modeling of market cycles. And it's helpful because like when you compare something like Caspa to Cardano even, there's just way more data to like try and evaluate, okay, well, risk is here. What does that mean contextually with these cycles? And like, is risk really looking good here? But for Caspa, that emerging asset theory is helpful because we're able to put together, a general risk model. And you can see it's at a stinking 15 right now. And really, I genuinely think this, like altcoins like Caspa, if we go back to the crypto chart, the business cycle does start expanding again. I don't know when it's going to happen, but if it's sooner than later or whenever, I think we're going to see charts like this. We're going to be like, dude, right at the precipice of QT ending and right at the precipice of PMI expansion, more rate cuts, Clarity Act, peak fear happening. Caspa was at a 15. We could go to 5. This might reach a 5 in the coming weeks. Like we could keep falling. I'm talking macro right now. But with all of that data, the risk is getting lower for these altcoins, and Caspa is at a 15. So 68% of the time after 3 months higher, and 100% of the time after 1 year higher. And then what happens? If it's at a 15 right now, 4 cents, what does the upside look like? We enter a bull. What price is Caspa going to be at 94 at risk? You know? That's what's crazy. If you're a Caspa holder, sign up with the trial, mess around with this. You can manage your alerts, set risk alerts, turn on SMS, go set your exit levels, go set your accumulation levels. What else? What else can we look at? Because I don't think I have in TradingView a Caspa chart. I might actually. Whew. That's crazy. You know what's funny is, reminds me of one of my favorite coins. Reminds me of Dog on Bitcoin, that chart. I'm just curious. I want to open up the Caspa weekly. You won't find me with all the macroeconomic data I'm presenting in this video and throughout recent videos and RSI on the weekly for Caspa. You won't find me at the very least calling bear market starting. That's just not happening. What's cool is like I see a lot of OGs, I think, on X, and they're just like, it is what it is, dude. I'm here. Like I'm here for it. I'm in this space. I'm building here. I'm invested here on the long term. I'm sticking through. And that's generally like my approach right now, especially because I think it is so undervalued. It does just happen to be that I think from a cycle perspective, the bull market has not happened yet, as presented in this video, because I just know there's new people that are constantly coming in the stream. But I wanted to look at AVAX. Somebody said AVAX in the dumpster fire. That's crazy. Look at Bitcoin dominance on a day like today. Bitcoin dominance falling. I'll tell you one thing. I did this video, Altcoins Less Risky, in May. I don't want to get all confident, right? Like this happens all of a sudden, Bitcoin dominance, boom. But I can tell you one thing. If, and we have to monitor even this, like this is the Treasury General account balance. So if this, the Fed's checking account, if this starts falling more dramatically now that the shutdown is over, this could be truly a short-term catalyst of liquidity entering the system. I'm not talking about QT and the QT liquidity being locked up and drained, stopping. I'm talking about a short-term liquidity catalyst that could cause a PMI to bump up. I think Bitcoin dominance will very much continue falling. And I find it interesting because depending on how, if this does happen on the short term, we just had the 20-week fall below the 50-week. So if you want to talk moving averages, just notice, you know, this happened last cycle, 1, and then 2, basically right after QT ended and altcoins dominated for quite some time. Are we getting a similar setup? I kind of think we are. I'll continue monitoring. We'll continue watching. But that's just my opinion. There's people that have the exact opposite opinion, and I completely respect it. And I'm alert. I'm alert to it because I don't pretend to know like what's going to happen. I really don't. Nobody does. I just know what I think will happen, and I'm trying to be patient on the data. But I wanted to look at AVAX because I know it was brought up. I have an AVAX chart. Check it. It's crazy how different these charts are. Like you look at AVAX, we just looked at XRP, very different structure, which is crazy. Even if you look at AVAX, though, it's kind of like it's in this downward falling channel. I don't think necessarily on the macro, it would be a terrible thing if we do start getting a more bullish trend because of liquidity, because of QT ending. Like if that thesis plays out, I think AVAX has a very nice upside. I think it'll break all-time high in a bull run. Right now, it's so crazy to even talk about those things because we're just absolutely capitulating. We look at some oscillators. These are the times to pay attention, everybody. I mean, when has it never been? Like, when has it not been the time to pay attention? So what I mean by this, man, it's over. AVAX is in the dumpster. Good time to pay attention. Not saying it was the beginning of a bull run. AVAX is in the dumpster. You remember August 2024, crypto was in a dumpster. Good time to pay attention. It's over for crypto. Good time to pay attention. Again, it's over for crypto. Oh, it's not over. We're back into it. Bull market starting. Like that's the emotion in the crypto space. But I'll tell you one thing that's different at this one, besides the record-breaking fear happening with AVAX and altcoins, this is what's different. The macroeconomic, the business cycle. Because all of these swing lows where we actually did get bounces, that was either within QT, still going, or even towards the end of it, and in the middle of contraction of the PMI. So if QT ends, PMI expands, AVAX looking better here than it has looked in years. Again, that's my opinion. It's completely based off of macro data. Hey, Dan, hope you're all good. Hope you are all good. Times are crazy. The red will pass. Thanks, man. I hope you're good too. Doing good over here, hanging in there. Bummer to see crypto falling as always. Keeps falling. You're a smart dude, but even you can't predict what's going to happen. I want to actually disagree with you. Number one, I agree. I can't predict what will happen. I say that all the time. I should put like in my thumbnail, I don't know. Because I don't know what's going to happen. But I disagree with you on something, that I'm a smart dude. I don't even think I'm a smart dude. What's funny is that we've been having bears even before the run up. The bears were right that we would crash. I got to do a nice little post right now because I want to tell you something. 16,000 people on this stream right now. Now, this could be a very meaningful live stream because QT ends. And this is a very big part of the analysis. QT ends. Days away. Years of stress on crypto. What happens next? We're going to see. This is to be continued. I like documenting all of this, everybody. I'm a content creator. I can't help it. I told my wife the other day, like, I'm a content creator? That's what I ended up doing? It just clicked, like, because I'm always thinking about videos to do and stuff to talk about. What else? Any other cryptos? Max fear just means buy for me. Algo. Let me see. I don't know if I have an algo chart. I do. Yeah, I mean, they're all, I love having the PMI chart overlap. Look at that, everybody. Look at it. It's crazy. It's crazy. I think we have an algo. I hope you all don't mind. Like, I'm showing off our intelligence system. I'm not trying to shill it, obviously. I'm growing this puppy. I would love for you to join our members and get a trial at the very least and try out these risk models. But I do, even if you're not going to do that, I do want to just share the data while I'm back here. We have Algo. We have an Algo holder buying the fear. It's at a 44. Interesting. It's crazy to see how different. Somewhere in like the teens, Algo's at a 44 in terms of risk. So that's very interesting. Not as low risk right now. Based on data, it's not as low risk. I don't know why I thought of, I'll take a glance at the chart actually too, but it's just so similar to every other chart. They all look the same. But I was just thinking, yeah, I mean, we're literally entering, in terms of momentum, we're entering bear market environments. It's crazy. I wonder if we're going to hit record-breaking RSI areas on some of these altcoins. I mean, that's like towards the bottom of the bear market for Algo is like 28 right now. Algo RSI is at like a 35. Couple more weeks of this, it's like, dude, we might be at bear market RSI territories while QT's ending. Not a ton of data on this Algo chart. What else? I'm going to take a look at dog. Oh, so before I do that though, I did want to, it's crazy. I'm sorry, I'm distracted reading the comments, but there's snack. Didn't mean to click that. I meant to click link just because I want to make a point. It's not so much like analysis. I just want you to, I want to make a note of this. Like, I want to ask you a question right now as I'm doing a live stream and you're on X or you're on YouTube and you're like, man, crypto's crashing. Is it over? Is it done? How many of you are even thinking about like the reality of crypto right now? So if you put yourself into a value investor's mind, and Chainlink does a very good example of this, but if you put yourself in a Chainlink or in a value investor's mind, how many of you are so wrapped up in the short-term fear, the short-term crash, you completely have forgotten, and it's okay because we all do, you've completely forgotten. Like, I don't want to call them narratives, but I just want to call it the reality of the situation. Chainlink is not like a hold of mine, but it is one of the most insanely bullish cryptos, especially for value investors on the macro. And I'm saying that I don't hold Chainlink. When you start remembering what's going on in the space, so a project like Chainlink, and all projects have their different like USPs, you can call it. Chainlink, XRP has its own, Cardano has its own, right? Chainlink is like at the center of everything crypto. So much hinges on Chainlink. It's at the center of like every ecosystem. And for a value investor, this is what matters, right? So it's like there's different dimensions to this, but you have the business cycle, you have quantitative tightening, you have everything that's going on, you know, from the macro level. You have, and then that's one arm. But then another arm, you have technicals, you have technical analysis, you have all of that that's happening. You have fear indexes, you have risk scores, you have all that. That's one arm. But it's funny, when we get into price action territories, especially high fear, we're falling, it's game over for crypto. People seem to forget the third arm. And that is the fundamentals that drive what make these good value plays. Chainlink is such a strong value play. And so I just wanted to bring that up. I just thought about it in terms of for Chainlink for some reason when somebody asked me about Algo. They have nothing to do with each other, but maybe because they're kind of like OG-ish. Nothing weird is happening. The weird I kind of talked about in today's video, Bitcoin dominance, the way it is moving. But we are in a bear market as per the 4-year cycle, which has been obvious since months back, yet you are delusional. It's fine. I mean, it's funny that people call me names for having a different opinion on an asset class. But I think the data, I really just spent an hour, and I've spent hours for the last week presenting to you data. And I recommend to you, you should go watch my video I just did the other day. There's never was a 4-year cycle. Because I think one of the riskiest things that anybody can possibly do right now, and maybe you end up being right, maybe there's a 4-year cycle. One of the riskiest things you can do right now is think that we're still in a 4-year cycle environment when everything has proven otherwise. What you've seen in terms of 4-year cycle has been an absolute coincidence in terms of where the halvings, if you look at the zoomed out chart, I think these yellow lines I have here are the halvings, where they line up with Fed monetary policy, as well as the business cycle, the PMI that you see in green. The PMI that you see in green, the liquidity engine that drives risk on assets like Bitcoin, like crypto, that's the cycle that we're in right now. So if you want to sit there and you want to call the bottom, or I'm sorry, the beginning of a bear market, while the PMI potentially finishes years of contraction and potentially gets ready to go into expansion because quantitative tightening ends within days, you might be calling the beginning of a bear market at the absolute worst time that you could have ever done that. Ever since back here at, the end of a bear market. So I just want to say that. And, I respect your opinion, but I also encourage you, if other people have different opinions than you in life, don't insult them, dude. Good point. Bro, it's unreal. We're at the 2024 October, November levels. Let me spot that real quick before I continue. October, November 2024 levels. Where are we at? On the weekly? We're at October 2024, November 2024 levels. Yeah. I guess it depends what chart you're looking at. But point being, with 7 trillion liquidity on the side, levels of crypto searching and retail interests we've not seen since 2016. Hard to fight BlackRock. There's a ton of money sitting in money markets. This is wrong. This is not right. Let me zoom out. This is not the best chart to be using throughout this video, but we can. So this comment is wrong, and I just want to show you why. I like these live streams because I can speak to comments that I get. So the beginning of the bear market 2 cycles ago was basically right here, January 2018. You can see actually the PMI topping out. Just to give you a sense, the top of the bull market. So basically, as you're saying, the beginning of the bear market, this is from a Fed balance sheet perspective. This is what happened. Went into QT. That was the beginning of the bear market, okay? And so let me explain that further. If we go back to this chart, you're saying that the beginning of the bear market was when QT ended in 2019, which was September 2019. You're saying the beginning of the bear market was right here. Number one, that's wrong in hindsight, right? This was actually way past the end of the bear market, which is here. This was not the beginning of a bear market. There was some short consolidation post quantitative tightening ending. And then crypto wanted to bounce along with the PMI. You can see PMI bouncing. Liquidity strains were just ended because QT ended here. This was not the beginning of a bear market. We started actually seeing a bounce up, and then this was COVID. And COVID was not a bear market. Nobody would sit here and say a black swan happening was the bear market. And right now, if a black swan event happened, crypto crashes, that's why it crashed. It's not because, man, we started a bear market here. So this was not the beginning of a bear market at all. This was very well past the end of that bear market. And I would say this was like the beginning of a bull market, the end of quantitative tightening. And so it's very simply illustrated on all of these charts that I've been laying out. And really, if you would have called the beginning of a bear market here, that was the absolute opposite side of the trade as a macro person. And so I think people are doing the same thing right now. They're sitting here in a very similar environment. QT ends in a week or just over a week, and they're saying we're entering a bear market. This is the beginning of a bear market. I think this will be the absolute opposite and absolute worst time to say something like that. And I can be wrong. And if we, in 6 months from now, we keep falling with red candles, right? And we never got PMI expansion, QT ending, didn't do anything. And we're just like, crypto's failing and it's game over. I'll have to come on here and be like, dude, that didn't play out how I thought it would. I was wrong. And I'm sure there'll be a lot of people calling me names for it, but look at that. Look at these comments, guys. I'm just going to ban that one. I don't know if this was, so thanks for the super chat. Says, I mean QE. Was this the comment that I just covered in terms of calling the beginning of a bear market? I don't know, but I mean, even still, QE, we had two previous bull markets, right? That many of us relate to a lot. It's back here. This was a post quantitative easing normalization bull market. And there's other bull markets happening back here, right? But we're talking about this, a post quantitative easing normalization bull market that happened there. Then we went into QT. And then we had last cycle's bull market, which was a QE driven bull market, right? This is the Fed balance sheet. And then the top of that bull market was right when we started getting signs, QT was coming into play. And we've been in that bear market ever since. So I don't know what you mean by, I think you're saying that when we get QE, it's the beginning of a bear market. That doesn't make sense to me. But the other thing is, my argument isn't even that we're going to get QE. I don't sit here talking about QE is coming, money printers are coming. I'm just talking about this coming to an end, that liquidity drain coming to an end. So I appreciate all of y'all. Is there any other altcoins? I start these live streams, I'm like, maybe 20 minutes. We're going on an hour, 20 minutes. Dude, we got an OG in the house. No bull market till you start drawing those green boxes like last cycle. Do it, Dan. Right? I do remember, and it's crazy how that played out last cycle. What's crazy to me, though, is how much of, yes, it worked out. Yes, the analysis, even for me last cycle, was largely based on 4-year cycles. But it's funny now that I look back and I'm like, wow, a lot of that was coincidence that it played out that well. And this is why it's so easy to think 4-year cycle theory is so on point. And it's because Fed monetary policy and everything that has happened in terms of PMI, this is what drives the cycles. Liquidity expansion has nothing to do. I mean, the Bitcoin halving was definitely relevant. Don't get me wrong. It's It's not nothing. It was way more relevant in the early days because of the supply shock factor, right? But now with crypto, just such it's a very important main asset class now. It's become clear that the Bitcoin halving is not what drives the 4-year cycle. Bitcoin halving is not what drives these cycles in these markets. It's absolutely liquidity. You can't change my mind on that. Somebody wants a Solana chart. Let's see what we got going on with Solana. Solana. Crazy. Complete reset. Crazy to me. Crazy to me to see the price of Solana like the same as March 2024. Hovering at all-time highs of 2 cycles ago. We are at the exact, this is a good, every chart brings like a different story. And I really enjoy that. I really do. Because if you look at Solana, for instance, imagine the hype that was going on in the bull market highs back here. Just imagine it. And now, again, when you take something like this, right? The business cycle, sorry, but it's so relevant. We're at the flip side, everybody. Greed was crazy high. Look at this. Okay, this is such a good visualization. Greed was crazy high at the top of the last bull market. This is what Solana price was. PMI, the business cycle, started falling. This was the bear market. QT started, everybody. It was game over. The fun was over. And there it is on a Solana chart. And everybody was greedy here. What do you think? Everybody is fearful here because they are. We are not at this environment where PMI is topping out. So we have an exact flippening of that situation from a sentiment perspective as well as from a business cycle perspective. And we're talking real macroeconomics here. What do you think happens? And even on the short term, we have liquidity that can slowly start kind of entering back into the system. A slow return, obviously, but even a shorter term return from the TGA. Think about this. This chart can flip even on the shorter term amidst this high fear. And I'm talking about the TGA. It's the checking account of the Fed. Because of the shutdown being over, if this starts drawing down and we get a shorter term catalyst of liquidity, something like the Solana chart is pretty crazy to watch because we get a little bit of a flippening to the upside on the PMI chart. And guess what? Look at this Solana chart. It's been in either quantitative tightening and the PMI contraction, consolidation for years. What's this going to look like if PMI actually starts really making a strong move up? And we are at similar price as we were at high greed at the top of a PMI move. Now we're at the bottom of a PMI move and we have extreme fear. That's crazy to me. Again, I don't speak with certainties. I'm not sitting here as one of those content creators like, it's game on, everybody. Go all in, everybody. Like refinance your home and do it because it's absolutely guaranteed. But this is data I'm not messing around with. I'm not messing around with that at all. It's crazy. TGA just ticked down. Can I zoom in? I haven't used this chart a lot, but like 928. I thought it was 924. So 924, 17th, 18th, 928. So anyway, that's crazy. That Solana chart is crazy to me. Look at that. Extreme greed, similar price. Extreme fear, same price. PMI topping out, PMI bottoming out, QT coming to an end. Pro-crypto SEC chair wants to see crypto thrive, succeed. Pro-crypto legislation, Clarity Act, institutions buying even this chart, Solana. They're buying right now while retail is just redistributing and selling. It's crazy. I feel crazy. I genuinely do because it seems like such an unpopular opinion what I'm saying. And I genuinely am like, like if I'm going to be wrong, I'm going to be big time wrong, man, in front of y'all. And it is what it is. It's okay. But this is just what I see and I can't unsee it. Do you know what I'm saying? And so that's the Solana chart. Let me see in our intelligence system, Solana's at a 23. So again, at a 23, price was higher 62% of the time after 3 months, 100% of the time after 1 year. So extreme fear, all the business cycle stuff we're talking about, we're not here, everybody. This is what we just looked at, November 2021, 98 risk. That's when you start selling. This is when our members alerts go off. Hey, you have this level to sell at 90, sell. You have this level to sell at 70, sell, because risk is starting to increase. It's getting up there. We're at a 23 right now. That's where we are right now, everybody. By the way, everybody, we got the free trial going on. We have a ton of risk models back there, and we literally just implemented this. I am so grateful, and like I'm just really excited. This just got launched yesterday. We accept crypto. I've been in this space for so long, and I've seen so many crypto products and stuff, and it's like it's oftentimes seems so hard to buy crypto. So I'm very excited to be like accepting crypto right now. So you can pay with crypto if you want. And check that out. But we also have, if you're not going to pay with crypto, we have a free trial if you want to try us out. But Solana painting a very nice picture. I need to do just a 10-minute video on Solana and what's happening with that Solana chart in terms of fear and greed index, as well as business cycle. That's nuts. Can you all press 1, like if you're bullish? Because I do feel crazy out here. You're right. Exactly. Highlight the positive comments, Dan. There are many here. I appreciate you. I know the silent majority, everybody. We got 20,000 people on this, 21,000 people. 21,000 people on this live stream in extreme fear. A moment to remember at this point of the business cycle. All right, I have to look at SWI. Because it's nuts. I'm on a monthly chart, by the way. I should change this to, I'll change this to a weekly. One thing I noticed, this is another thing I want to do a video on. Again, speaking of the business cycle, the PMI, I don't want to home in on it so much where I'm like, it's the only thing that matters to me, because it's not. I want to make that myself clear. But I've done a lot of videos on everything going on, the mechanism between that, the Fed balance sheet, M2, that's USM2, the TGA. But one thing I want to do is a video or two really looking at what type of lagging effect or leading indicator effect is there. Because I noticed this on other charts, and I just opened up this chart and noticed this. Look at SWI. We got a lot of ones going off, man. Dude, we've got a lot of silent bulls out there. I like it. I really do. Look at SWI, and just, so here's PMI, right? Trending down, about to expand. And look at the move. It's almost like the expansion of PMI it's like SWI made a move before it. And the reason I'm bringing that up, and I want to capture more data points, because I don't know if this is actually a consistency or something even worth doing a video on. But I'm bringing it up now because I just noticed it, and I've noticed it on other charts. You can even see topping out SWI shortly before, I mean like a month before business cycle starts consolidating again. And check it out. Little pump, business cycle. So there's something I want to actually try and dissect a little bit more, but there's a SWI chart, and it's I mean, we're testing previous swing highs that we had in January, to March 2024. I'm sure, again, we could probably look at the fear and greed index at this moment. And it was probably more fear, obviously. And obviously, I'm sorry, more greed back here. So we're at a similar price, very similar to Solana, a little different. The chart doesn't look as great, but it doesn't look bad. RSI getting to low territories. It's at low territories. Risk model for SWE. 25. So to give you context, if you go to the August 2024, is a pretty big like washout in crypto. If you remember, I'm quite sure people were calling for the beginning of the bear market. I even noted in today's live stream, I think September 2024. So here's August 2024. So this entire move, we broke down in September, the 50-week moving average. We actually closed a candle below it. This is happening right now. Candles, it's even worse, but also happened in April, March, April. Tariff fear. So going back to the chart or the risk model for SWE, you can see in that August move, 23 risk. And then back here, 2023, 13 risk. So just to give you an idea, all these risk models are different. For me, if I was like, and I actually have SWE in my iTrust Capital account, but if I'm like, I'm going to accumulate more SWE, I'd be very much watching the 13, the 2023 low. I think it was a 13, wasn't it? Yeah. And then look, 23, we're entering the territory. High fear territory. We can look at, so risk was just above 50 in that March 2024 move. So you can see it's a newer chart. It's a newer risk model, but that's the context that we have in terms of risk on this chart. So risk was 50s back here in this move. Risk is 20s at basically the same price at this move. This says one thing, very simple thing. Risk models are not predictive, but it's not saying so we can't fall lower, but it's saying right now at a risk of 23, as we fall, it's a better time to buy than it would have been back here in terms of risk. And that's obviously clear because if you bought there, guess what? You bought a pretty local top and we had months of downside. So that's the purpose of the risk models. It's to be able to make these like very risk-based, data-based decisions, not just like speculative. Like, ooh, you know, this is how X sentiment is right now. You know what I mean? Bull market canceled. Bull market delayed is what I think. Delayed. If you're new here, I have to just show you this. We can go to link. Look at the PMI chart in green. Go watch my recent videos talking about the QT ending, business cycle, PMI, what the Fed is doing. Start paying attention to this data is what I will say. I'm not gonna keep talking about it. It's been an hour and a half. But look how these cryptos move with that data. And if this green line goes into expansion, I can tell you what's probably not going to happen. The top of a bull market and the beginning of a bear market where it goes into this fall. So study the data, everybody. Hour and a half in, I appreciate all of you. I do. If you're not a subscriber, if you got even the slightest ounce of value, please smash the subscribe, give it a like, give it a repost. If you're on X watching, give it a repost and let me know your thoughts in the comments below. And if you're not in our intelligence system, I'm so excited about the system, even though I'm not sitting here exiting at high risk scores and we're talking about accumulation. Go plan your macro plan based on data, based on risk. There's a free trial We put our money where our mouth is. If you don't like it, just cancel. And we do now accept crypto. We just turned on text alerts. So you get SMS text messages sent to your phone, whether you have a risk score that gets hit for accumulation or selling, or you can even go in our exit planner. If you just have your prices set that you want to sell at, you can also save and enable notifications of prices being hit and get texted right to your phone as well. So I'm excited to be able to offer this to you. We launched this system in May. It's been tough times for crypto. It's been, I want to say, a tough time to launch a company in crypto, but exciting, because I genuinely think for all of us macro value investors in this space, we are at the beginning stage of something I think that is going to grow a lot. So check it out if you're interested. And if you're not, that's cool too. But let's continue tracking the data, everybody. Hang in there. I'll continue tracking. If we keep falling, maybe I'll do another video, but I appreciate each and every one of you. On your way out, please smash the like and subscribe. I'll see you in the next video. God bless.